really very popular, and so this one I think will be just as popular, and I imagine just as vigorous in terms of the questions that people have to ask. So I want to welcome today two of the key people within HMRC who have been engaged with the British Chambers and with Chamber Customs and other business organisations. Today we've got Claire Wilson, who is in the stakeholder engagement team in Customs and Border Design at HMRC, and also Ellie Patterson, who's the Northern Ireland stakeholder engagement lead on Customs and Border Design at HMRC. And we'll hear from Ellie later, who will go into quite a lot of detail in respect of the changes for Northern Ireland. But before we do all that, and before we hear from them, we want to do one of our snap polls just to get an idea of where you are in terms of your readiness for the end of the transition period. So if I ask my colleague to post up the question now, this is a yes/no question. So the transition period will end on the 31st of December, after which new terms of trading will take effect for the UK. Has your business carried out a risk assessment on the potential impact of this on your business? The answer is yes, no, or don't know. If I can ask you to answer that question now and just click one of those buttons, please. That'll give us a steer on where we are in terms of the room. Thank you. Okay. My colleague Julia can just tell me where we are in terms of numbers of respondents there. I have it now. So we've got 63% saying yes, you have carried out some kind of risk assessment, 16% saying no, and 21% don't know. I have to tell you that's a bit of a tick up. The last 3 times we've asked that question up until the 1st of December, the yeses were around 58%. And the balance. So it was around 60-40 split between those that had and those that hadn't or didn't know if they had. So slight uptick there, which is welcome, but still leaving quite a significant gap in terms of where we are in preparedness and businesses being ready. So as we head towards the end of the transition period on 31st December, and perhaps a new trade agreement with the European Union, today leaves only a few working days for some and 16 for the rest of us before we fully exit the single market and the customs union. The UK borders, of course, will then be under direct control of the UK government and subject to a United Kingdom's customs code, or what we call the border operating model, which was launched out in July of this year. And obviously new systems, new processes and procedures for many businesses that hitherto have not had to involve themselves in the paperwork of trading goods across borders. That means that businesses do need to prepare, and you've shown that some 64% of you or thereabouts have made some steps towards preparing for that inevitable circumstance. For others, you still have more to do, and maybe that's why you've come on the call today. We've had lots of false dawns of day one no deals and also the withdrawal agreement, but actually this is the end game. By the 31st of December, we'll know whether we're leaving with or without a deal with the EU, the effect of which, of course, will be perhaps to reduce tariffs and duties, but the effect, unfortunately, will not be to reduce the paperwork and the processes that have to take place. Today, we'll aim to point you in the direction of the practical things that you have to do. Even at this late stage, there's still some time to do some of the things that are required. I should say that the presentations you'll see today, you will receive a copy of those presentations after the call. We also are recording this session so that if you wish to do so, to check something that was said, you will be able to wind back and see those or hear from what people had to say at the time. So you have that assurance. You should also, if you have direct questions you want to ask, there is a Q&A button at the bottom of the screen. Please use that. And during the time that our speakers are speaking, my colleagues and myself will be monitoring this and trying to curate those questions into a rapid, quick fire 10-15 minutes at the end of our call, where we'll come to as many of the subjects that have been raised as we can. So without further ado, I'm going to pass you now to Claire Wilson, a colleague from HMRC, who's going to take you through some slides and some preparations that you should be making and can make even at this stage in readiness for the end of the transition period. So Claire's on the phone. She's going to shout at the end of each slide that she wants us to turn the slide, and my colleague's going to take care of that. So hopefully you can see the slides and we can get those in presenter mode, and Claire can kick off. I think we just need to
Liam.
presenter mode there, Alan. Yeah, Claire, over to you.
Great. Thanks, Liam. So hi, everybody. I'm going to walk you through some slides. You may have heard some of this. Some of it might be new. As Liam has said, there is still some information to come as a result of negotiations. We'd very much encourage everybody to sign up for the transition updates on gov.uk, because that is where announcements will land first. But let me walk you through the slides. If you could go to slide 2, please, which is customs update. And I'm just going to walk you through the main points of change from the 1st of January. So obviously, as Liam has said, customs declarations are a requirement from the 1st of January, but we are moving to this in a staged process. So for importing, and that is importing only, traders who are importing standard goods, that's non-controlled goods, will be able to take the option of deferring submitting their declarations for a period of up to 6 months from the date of import. That was announced earlier this year, and that does give traders some time to get used to the process. It also allows them the deferral of payment of customs duties as well, which might be quite important for businesses. So as well as that, we'll also be waiving the requirement for safety and security declarations on imports. That will be for, again, a period of 6 months. The bad news for traders who are importing controlled goods, such as excise goods, but there is a full list on gov.uk, is that you will need to follow full standard customs requirements. So full declarations are required. The UK also will join the Common Transit Convention in its own right. That allows us to move goods across member states without having to pay customs duties at each border. And there is more information about that on gov.uk. But again, moving in those stages, so that deferral of information for 6 months is not applicable, because the Common Transit Convention has very set requirements. We are also introducing postponed VAT accounting. That was announced in the budget earlier this year. If you're a VAT registered business and you choose to use the staged customs controls, that deferral for 6 months, then it will be mandatory to use postponed VAT accounting. If you are not using the staged controls, it is still an option that is available to help cash flow within your business. If you could move us on to slide 3, and this is import declarations for that 6 month period. So as I've said, traders who are moving standard goods will be allowed to defer full declarations for 6 months. In order to do that, they will need to have a UK EORI, which is one of the steps that you can take very quickly and easily on gov.uk. It takes around 10 minutes to get one if you don't have one already. And you will need to make an entry into declarants records. And again, there is more information on gov.uk, including the border operating model, which Liam has talked about. I should say that border operating model is over 280 pages long, so do have a cup of coffee ready if you're going to read that one in one go. Traders who are moving controlled goods, as we've said, they need to make full declarations. That can be full, simplified. It does depend on the trader's authorization, or traders can use transit. But that will need to take place from the 1st of January. And if you could move us on to slide 4, please. This is exports from January to July. Now, unfortunately, there are no easements around exports. So again, full declarations if you're transporting goods between GB into the EU. That means full customs declarations and safety and security declarations as well. And we've talked a lot lately in communications about border locations, and the information is now being published on border locations and what infrastructure they will have in place. So fairly recently, we've published information on border locations, which we anticipate will be using pre-lodgement, and also border locations which will be using the goods vehicle movement service as well. And so you can find more details. There's some very helpful step-by-step guides for both importing and exporting. And when you get this pack shared with you, that link will take you straight there. If you could move us on to slide 5, please. And this is full controls from July 2021. So that simplified declaration around deferring your supplementary declarations for 6 months, that will come to an end in July, and full declarations will be required for both import and export. The Goods Vehicle Movement Service, which we will introduce partially from January, will come into being for all imports and exports that need to be pre-lodged from July. And we've been working with those border locations about different models that they will use at their particular location. So some will be using a temporary storage model, and some will be using the pre-lodgement model. And some border locations may choose to operate a hybrid of both. If you could move us on to slide 6, please. Just want to say a few words about customs special procedures, because this is one that we're getting asked about a lot. So customs special procedures allow businesses to benefit from partial or full relief on the payment of customs duties and VAT. You can apply for them in advance or retrospectively. There are different kinds. There is temporary admission, inward processing, outward processing, and there are other kinds as well. For once, HMRC's got this right, and if you Google on gov.uk Notice 3001, you will get all of the information about all of the different kinds of special procedures that are available. And if you're someone who has an authorisation in place already, we will be writing to you to let you know if there are any changes to any condition or geographical scope before the end of the transition period. But most authorisations issued before transition period ends remain completely valid. I just want to say a quick word about duty deferment accounts as well. So duty deferment accounts, we have changed the criteria for this. And there is, again, new guidance. I'm sorry, there is lots of new guidance for people to read, but there is some new guidance that was published at the end of October. The new rules allow compliant and solvent businesses to defer customs duty, import VAT and excise duty without a guarantee. And there are 2 levels. Firstly, up to 10,000 a month, and then also over 10,000, providing we could get some more details about financial resources to support that. We have been writing to all existing duty deferment account holders to let them know of the changes and what they might want to take action on. So if you could take us on to slide 7. These are some helpful hyperlinks to help and support that's available. HMRC has been writing now every month to all VAT registered traders to tell them about the actions they need to take. If you aren't a VAT registered trader, it's still worth checking out those letters, which are available in one place on gov.uk. And for this month, we've issued a handy checklist about the top actions that you should be thinking about taking before the end of the transition period. As well as that, we're also running some other help and support. So there are HMRC, not to advertise a rival product, but there are HMRC webinars running several times a week now, and they are available on importing customs declarations and also on exporting. And we'll be adding a further 2 webinar types in the coming days around stage customs controls and around what your business responsibilities are when you use an intermediary. There's also a cross-Whitehall forum that's been developed by Cabinet Office. This is an online customer forum and allows you to ask questions online to any of the departments in one portal. And finally, just a quick word on helplines, because sometimes you just want to speak to somebody when things are getting urgent. Our Customs and International Trade Helpline is operating 8 till 8, Monday to Friday, and it will start operating at weekends on Saturdays from the 2nd of January. And as well as that, all of our usual 24-hour helplines around the National Clearance Hub remain live and are staffed with far more resource than they usually would have. I think there's several thousand people being drafted in to assist with those helplines. So that's just to tell you where some of the help and support is available, because recognising that you will still have questions and need some information and help, there are lots of places to go. That's all I wanted to say about the GB EU movements. And I'll pause there, Liam.
Thank you very much for that, Claire, and for your pausing. I must apologise to those viewing the slides. We seem to have a bit of a technical hitch on slide sharing at the moment, although we have caught up. And whilst the screen isn't exactly what you would expect to see, we are seeing the slides again. Before we move on to hearing from Ellie in terms of the Northern Ireland situation, two things I want to say. One is thank you for your questions. We've got over 100 questions in so far. We'll get to as many of them as we can, or the subject areas at least, if not the specific question, and answer as many as we can on the call today. Others we will be passing to Ellie and the team to respond directly to you as well, so that you get the answers to those questions that you have. Right, before we move on though, one second and final poll, which my colleague will put up, which relates to the Trader Support Service in Northern Ireland. We just want to get a straw poll now and see where you are in terms of whether you have or haven't registered with the Trader Support Service for Northern Ireland. It's a yes, no, or I don't know again. Please answer your question by just clicking on one of the answers, please. Just give you a second or two to do that. And we'll shortly get a result. This is a service that has had quite a significant take up in the last couple of weeks. Actually, only a third of you on the call have registered so far. 46% of you haven't yet, and 21% don't know. Well, after Ellie's presentation, the no's might decide that maybe they should, or maybe they don't need to. So let's take you now back on the presentation. Who knows what will happen here? We might actually see it in the presenter view. And I'll hand over to you, Ellie. Thank you very much.
Great, thank you very much, Liam, and good afternoon, everybody. So I'm going to focus my presentation this afternoon on the decisions that were announced following the Joint Committee conclusions last week. I will briefly cover over just some general points about how the Northern Ireland Protocol works, just for background as well. There is a lot of content in the slides that we have on Northern Ireland, so we will share these with you via the BCC after this session, so you can look at the content in more detail if that would be helpful. So if we can skip to the next slide and then the one after that. So I think just as a bit of as a kind of warm up into the topic, the Northern Ireland Protocol is part of the withdrawal agreement that was adopted by the UK government at the end of January 2020. And it comes into effect from the 1st of January 2021, irrespective of the position with a free trade agreement with the EU. It is the part of the withdrawal agreement that resolves the problem of the border between Northern Ireland and the Republic of Ireland, and fulfills the commitment by both the EU and the UK government to avoid having a hard border on the island of Ireland. Some aspects of that were still under discussion with the Joint Committee, because there were some areas that, as part of the protocol, needed to be further discussed in the detail established at the Joint Committee. And these are the announcements that were made last week and that I will go through in the session today. So this clarified three crucial areas. So the first was about the requirement for export declarations as goods leave Northern Ireland for Great Britain. The second was around the process for identifying goods, whether goods are at risk on entry to Northern Ireland, and that is an assessment of whether the goods are at risk of moving into the EU, and therefore the consideration of the application of the EU's tariff to those goods movements. In addition, it announced that a UK trader scheme has been set up that will allow businesses who move certain types of goods into Northern Ireland to declare that their goods are not at risk, and therefore there will be no requirement to pay the EU's tariff on them. Just before I delve into that more detail, I think there has been some confusion following all of the things that were confirmed last week, because there were some easements put into place in respect of SPS processes, and notably about the requirements for export health certificates. I think there were some people who had hoped that that might mean that there would be some relaxation in the requirement for import and safety and security declarations for goods movements into Northern Ireland. So before I go into the detail, I want to just confirm that there is no change to the requirement for declarations for goods moving into Northern Ireland, and all goods movements will require safety and security declarations and import declarations. So we can move to the next slide, please. So the next slide just very briefly summarises the position for goods movement between Northern Ireland and the Republic of Ireland, and confirms the bit of the command paper and the other existing guidance that sets out that there will be no hard border on the island of Ireland, no physical infrastructure, and no checks or processes for goods movements between Northern Ireland and Republic of Ireland, and these can continue to take place as they do now. Moving on to the next slide, and I'm conscious from the presenter screen that they're not moving as quickly as I am going to go through them, so apologies for that. So moving to the next slide, in terms of unfettered access for Northern Ireland to GB movements, and unfettered access is a concept we have been talking about throughout this year, and is the concept that goods movements from Northern Ireland into Great Britain should have no additional checks or processes, and they should have the same access to Great Britain markets that they do now. So that position was confirmed through the Joint Committee decisions, and that most goods movements from Northern Ireland to Great Britain will not need either exit summary declarations or export declarations. There are a few limited exceptions to that, and those are where goods are placed under a customs special procedure in Northern Ireland and wish to move into Great Britain. So this might be, for example, if a business chooses to use a processing relief and moves the goods using that process while in that processing relief. Goods that are moving while under transit will need to have processes carried out to carry out an Office of Transit function as they move from Northern Ireland to Great Britain. And there is a list of 14 prohibitions and restrictions where export declarations will be required for goods movements from Northern Ireland to Great Britain. Now, although 14 sounds like a lot, these are actually quite niche types of things to be doing, and it focuses on types of goods where international conventions are in place and already put additional requirements on those movements of goods. So these will be published on gov.uk, but they are things like the movement of certain controlled gases and certain types of endangered species that are already covered by CITES requirements. So the expected impact on trade is negligible in respect of those ones. If we can move to the next slide, please. So we have already set out in detail before about the unfettered access provisions. And you will hopefully have seen that a definition of Northern Ireland goods for the purpose of that unfettered access provision is already laid in UK legislation. In this slide, we just highlight that that is a first stage of the provisions on unfettered access, and further legislation will be brought forward during the course of 2021 that will bring forward a longer term approach to unfettered access. And essentially what that is going to be doing is more tightly focusing the definition for the purposes of unfettered access on businesses that are established in Northern Ireland. And this is to address concerns by some industries that the approach that's being taken in the initial stage, which has been put in place to try and preserve the flow of goods so far as possible, could leave Northern Ireland businesses with the risk of unfair competition from other businesses who may be able to take advantage of those provisions if they are not tightened. So over the course of 2021, further legislation will be brought in to address that. If we can move on to the next slide, please. So this next couple of slides, we look at the position for Great Britain to Northern Ireland movements. And I'm going to skip over and quite quickly the next two slides, because this talks about the things that have been established for some time and that I've already confirmed around. The protocol means that entry summary declarations and import declarations are required for goods movements into Northern Ireland. However, the government has set up the Trader Support Service, which was mentioned in the poll earlier, which is designed to help businesses in understanding the protocol, and will also be able to make declarations on behalf of businesses into HMRC systems. So the Trader Support Service is live. We have links in this slide pack to the links to it if you are interested in finding out more. It offers an enormous amount of training and education for businesses in understanding the protocol, in understanding customs processes, how they are applied in the Northern Ireland context, and the things they need to understand about trading to be able to apply the Northern Ireland protocol to their business. So that education and support material is beneficial for businesses at all parts of supply chains that have goods moving into Northern Ireland, to help them understand what may be required, if not by them, by others in their supply chain. In addition, the Trader Support Service is able to make declarations on behalf of a business, so it is in effect acting as a customs intermediary, and can make entry summary declarations and import declarations on a business's behalf. We have a lot of businesses that are already engaging with the Trader Support Service to put that in place, and are testing those processes now, ready for the end of the year. So if we can move on 2 slides, please, and we'll go on to look at the provisions around at-risk goods. And this is an area that is worth spending a little bit of time on, because this is new content that was only announced at a high level at the end of last week. And guidance, the first part of the guidance went on to gov.uk yesterday, and we're expecting further guidance to go on gov.uk today, which will set out this all in more detail. So essentially, this is the process that has been agreed through the Joint Committee for determining whether goods are at risk of moving into the EU when they enter Northern Ireland. And this determination is made at the point the goods move into Northern Ireland, and it's actually processed via the import declaration. So there are certain goods that will always be at risk. There are certain goods that will automatically be not at risk, and then there are opportunities to declare goods not at risk. So we'll take each of those in turn. So the first is, there are some categories of goods that will always be considered to be at risk under the protocol, and that is goods subject to EU trade defence measures, goods subject to commercial processing in Northern Ireland and where the additional processing criteria is not met, and goods that come in from outside the EU or UK, and where the EU duty is more than 3% greater than the UK duty. So that latter bullet point is looking at imports into Northern Ireland from rest of world locations. So those goods are always at risk. And then there's a category of goods that are automatically not at risk. And this would be where the UK duty is equal to or higher than the EU duty. In a Great Britain to Northern Ireland movement context, as there is no UK duty on internal trade, this comparison is made against 0 as the UK duty. So it would only be applicable if the EU tariff on the goods entering Northern Ireland were 0. In the rest of world context, obviously, you compare the UK global tariff against the EU tariff. So a business would not require a UK trader scheme authorisation to declare the goods not at risk when they come under this specific category. Can we move to the next slide, please? So we then move into a category of goods that may be declared to be not at risk. And this is done in conjunction with a registration under the UK trader scheme, which I will come on to talk about in a little more in the next slide. So certain types of good may be declared not at risk. And this covers categories of goods which are primarily about use in Northern Ireland. So we have goods for sale to or final use by end consumers who are located in the UK. And that would be, for example, goods for sales in retail stores in Northern Ireland, goods for business use in Northern Ireland. So some examples might include both stationery or a farmer purchasing a tractor for use on their farm. In respect of these, there's no requirement to actually make the evidence that that's what the goods are being used for as part of the declaration. A business that is authorised may declare their goods not at risk on entry to Northern Ireland, but they will need to hold evidence in their commercial business records that, were they to be asked for that information, could be provided to HMRC to support that the goods were used for that particular purpose. And I've put some examples there in the slide of the type of evidence that may be helpful in this scenario, but this is by no means supposed to be exhaustive. It is just some examples that might be relevant. So things like receipts, invoices, contracts, purchase orders, delivery receipts, consignment notes that help to demonstrate where the goods went to. If we could move to the next slide, please. So the UK trader scheme itself So as I've said before, to declare goods not at risk, a business must be authorised to use the UK Trader Scheme. There's no limitations on the size or sectors of businesses that may use it, but they must meet the criteria that's set out here. So they must be established in Northern Ireland. Alternatively, if they are established in Great Britain, they need to have indirect representation in Northern Ireland and have a fixed place of business in Northern Ireland where records are available and where goods are sold to or provided for final use by end consumers. In addition, they need to have no history of serious customs or tax infringements or other similar criminal offences of an economic nature, and have sufficient control of their operations and record keeping to be able to provide the evidence to support not at risk declarations. The main part of that criteria to think about then is that establishment condition, and that's the thing that we are, I'm seeing quite a lot of questions on initially as businesses work through those establishment criteria to see whether they are applicable. So a business that wants to apply for the UK Trader Scheme can do so now through gov.uk. The link to be able to go in to do the application is now live. They'll need to provide information not just about the business itself, but also about its trading history, and also some details about the record keeping that it operates in order to satisfy their point there about having sufficient controls of operations and record keeping to provide the evidence. Bearing in mind there's a very small time we have before the end of the year and when the Northern Ireland Protocol comes into effect, we will be able to give a provisional authorisation under the UK Trader Scheme that would allow businesses to start declaring their goods not at risk from the beginning of January, which would then be confirmed once HMRC has had a chance to assess and process the application. So that opportunity for a provisional authorisation will be open until the end of February. In order to be able to declare goods at risk during that period, you must have made an application and have that acknowledged by HMRC to say that you can use the provisional authorisation pending confirmation of the actual application process. So if we could just move on to the next slide, the final bit I just wanted to cover is around commercial processing. And this is an additional part of that UK Trader Scheme application that means goods that might otherwise be considered at risk because they are going to be used in commercial processing can be declared not at risk, subject to certain criteria. So the main criteria are, there's one which is for small processors. So a business that moves goods into Northern Ireland for commercial processing with an annual turnover of less than £500,000 a year can apply through the UK Trader Scheme to declare their goods not at risk if they meet that criteria. In addition to that, where there are certain approved processing sectors where if a business is part of one of these sectors, they can also apply into the UK Trader Scheme and declare their goods not at risk on entry to Northern Ireland. And those sectors are the processing sectors, so the sale of good to end consumers, construction in Northern Ireland, health or care services carried out in Northern Ireland, not-for-profit activities carried out in Northern Ireland, or final use of animal feed in Northern Ireland. So any business that meets those criteria because they are bringing in goods for use in those sectors would need to include that on their application to HMRC when they apply for the UK Trader Scheme. And once they are either receive their provisional or full authorisation, they may declare their goods that they bring in for these processing activities not at risk. Again, they must keep the supporting evidence in line with the others using the scheme. So those are the areas that I wanted to cover. At the end of this slide pack, in the next two slides, there are a couple of flow charts that are also have been designed to help people go through and understand the provision of the at-risk rules and the different options that are available to them to declare goods not at risk. I won't dwell on them in this session because they are quite detailed, but they may be helpful for you to, when we share the slides afterwards, they may be helpful for you to review and go through and just work through the different options that are available. So just thank you very much, Liam, and happy to take any questions.
Thank you, Ellie. The flowcharts I think people might find pretty useful. I had a look at them earlier myself. Thanks for that. There's a lot of detail, of course, in your presentation, in part because there's a lot of detail to cover in the way that the border has changed, not only, or will change, not only in respect of UK, EU, but of course, because of the Northern Ireland Protocol, there are specific circumstances that apply for import and export there, and people will be forgiven for thinking that it looks pretty complex, because it kind of is. We have lots of questions, Ellie and Claire, so we're going to try and get through as many of those as we can. And whilst you've been talking, I've been trying to curate some of those. So I'm going to try and pull some threads together. Where I'm asking one question, it's probable that there are a number of people have asked something broadly similar or on the same subject. So I'm going to start with a GBNI question from Lauren Henderson. We send orders from GBN to NI. The customs entries have to be done. I think you've answered that, Ellie. So the customs entries have to be done at the Northern Ireland end, I think. She says they've signed up for the TSS, but advice is confusing. Any response to that?
Well, I'm sorry that you found the advice that you received through the TSS confusing. It would be helpful to understand if there's particular parts of the advice that have been either confusing or have been contradictory to something you may have heard elsewhere. I mean, if you are able to let us have perhaps via Liam any specific examples, we can certainly follow those up to ensure that any misunderstandings are corrected.
Yeah, maybe Lauren, if you can type back in the Q&A, which elements do you find confusing, because I will come back to it. Next question, there's a few people have asked the same kind of question, Claire and Ellie. This is really about goods that are in flight between leaving one place and arriving at another between the 11 o'clock and the 31st of December, prior to 11 p.m. on the 31st of December, and arriving somewhere else after that time. So Stacey says, about those deliveries leaving the EU before January the 1st, while arrival to UK and arriving in the UK port after January the 1st, will there be an export declaration? Sorry, she says there will not be an export declaration at the EU side because the goods have left the EU prior to 11 p.m. on the 31st of December. But will there be an import customs control at the UK side for goods that have departed the EU prior to 11 p.m. on the 31st of December?
Hi, Liam, it's Claire. I'll come in here, and the news is good. So no, you do not need to complete import declarations if the goods have been moving before 2300 hours on the 31st of December. I must apologise, HMRC is going to publish some information as a priority, I'm hoping in the next day or two around this. But just to confirm that where a trader can show that goods were in free circulation in the EU and that they started that movement prior to 2300 hours on the 31st of December, customs documents on entry to GB will not be required.
Thank you very much. That's very, very clear. Related to that, but not taking you outside of the EU, Graham, I'll find Graham's question. I had it here a second ago. I'm sure it was Graham McDonald. Asked the question, if there's an EUR1 that's been certified during December for an FTA country and the goods then arrive in January, will the destination country still respect that EUR1, a preference certificate?
I will confirm that one after today's event, but my understanding is that is correct. But I will get that double checked and make sure that we've got it covered somewhere in guidance. And just to note that there will be a new UK EUR1 available on gov.uk from the 1st of January, and we can share that link with you guys as well.
Yeah, not only on gov.uk, but of course from your local Chamber of Commerce, who will provide you with those UK EUR1s, and they in fact have them in stock already. Although they're not able to issue them right now, they will be available in the next few days for customers who require them. So I think the other thing probably to add to that, Claire, is that if it's going to a country of destination that has signed a continuity agreement with the UK, then it is likely that they would accept that preference certificate as evidence of preference than a country that had not signed a continuity agreement. But it'd be useful to have that clarification I think. I'm now going to go to an interesting question from Bodan Ratic, who says, if a UK company sells to an EU entity, an EU business, and I think the question is delivering duty paid. So delivering duty paid, the VAT and duty would have been accounted for by the selling company in the UK. The question is, can the UK company pay the VAT? And also, can the UK entity recover it afterwards, and how? So it's a VAT-related question. I know it's not specifically your area, but
it's not. And you know, I usually shy away from these VAT questions, Liam. But
you do. Okay.
yeah,
I'll suggest that Bodan poses that on the directly into HMRC on the in one of the links that you've provided.
Yeah, I was just going to say, Liam, just happy to come in there for a second, because we just talking about delivering duty paid. So if you're selling into the EU, yes, you can register for VAT in the EU. We'd recommend that you start looking at the annex information that is available in the border operating model, which is quite good, and does sort of go country by country. So there is some good information in there. But just to let attendees know that we are making a proposal to change the duty deferment account rules that we announced previously. So some of your attendees will know that the idea was you had to be UK established in order to hold a GB duty deferment account. We are looking now to amend that so that EU traders will be able to hold a duty deferment account for Great Britain, provided that they have got a full customs comprehensive guarantee in place. And we will be publishing more information and keeping stakeholders like the British Chambers of Commerce fully up to date on that.
Super. Thank you very much. And that'll be welcomed, I think, by quite a number of businesses that are EU-based businesses.
Yeah, thanks, Liam.
Different subject matter altogether, long-term supplier declarations. Bruce Geddes asks, will there be a UK template that can apply from the 1st of January 2021?
So Liam, it's Claire again. I'm going to confess that I am not fully up to date with long-term supplier information. I know our team have shared some rules of origin information with us, some Q&A, and we'd be happy to share that with you guys in the British Chambers to make sure you can get it out to members.
Yeah, there was some information, I think, published. I'm going to look like a right geek here on the 1st of December on Origin that does cover long-term supplier declarations as well. I'm going to move on to the next question and try and find that link just to check what it says. But it does mainly cover the period of now, whilst we're in the single market or behaving as if we are, as a part of the transition. I'll check if it also has advice on the thereafter. So coming now to Lee Wallhead asks, where do I apply for a duty deferment registration over £10,000? Because of course that's the amount that's automatically offered to those that are approved for a guarantee waiver. Did you want to take that one, Claire?
Yeah, certainly. So I think I mentioned in my update that we published new guidance on this, and which also contains the links to some online forms. We're getting really with it in HMRC. We're doing so much more online. So there's some online forms for you to apply for duty deferment accounts. And yes, you can apply for one over 10,000 a month. We'll just ask you some additional information about your finances to make sure that you can cover that. So we'll share that. I'm sure you've got that link as one of your favourites, Liam, but we're happy to share it again.
It is, and I think gratitude to HMRC for the review of that form. I think you'll find it much more simplified than the CCG application. I think it runs to 2 and a bit pages in total on financial information that ought to be readily available for people. So I commend HMRC for the work in getting that down to a manageable size. Amanda Adams asks, she says, can you confirm if we need to put both our GB and XI EORI numbers on all our paperwork, or can we use the XI for everyone? I'm presuming that Amanda is Northern Ireland based business, but I don't know that for certain. She doesn't say. So can she just use XI for everyone, or does she have to switch between GB and XI for specific movements?
So thank you. I think it depends what context you're using it in. So if you're using your EORI number to act, or any of your reference numbers to act with HMRC systems, you will need to use the correct GB or XI prefixed number to ensure you are to ensure you are able to access the system, but also to make sure you're interacting with our systems in the right way. If you're thinking about your sales invoices, and particularly if you're a Northern Ireland business and you have sales invoices that might go to customers in the EU, but also might go to customers in Northern Ireland or in Great Britain, you could show both your XI and your GB VAT number on your sales invoice, for example, and we would have no issue whatsoever with that doing if it helps in terms of administration and not having two sets of invoices. It may also help with some software packages as well, although not necessarily all of them, because some of them don't like having two numbers in them, apparently.
Okay, thanks for that. So it kind of depends, and I think probably I'm sure Amanda's already registered on the TSS. That would be one maybe to post into TSS or into HMRC for a clarification, but giving a bit more detail on what goods and going to where. Probably would be helpful. Luke Johnson, is related to that. Do you require a customs guarantee if you apply for a duty deferment account? Is the question. You don't, as long as you apply for a guarantee waiver. I think I'll quickly give that one and move on. Pete Chapman, quick one. Can you confirm the HMRC helpline number? Claire, are you able to do that?
I can. I don't have this tattooed, but I do have it written down. So I'm going to read it out to you. And it is available, as I said, 8 till 8. Now I'm looking for it and I can't find it. Oh my goodness, I've let myself down badly here.
Well,
come back to me. Come back to me, Liam.
I'm actually going to go back to that question in long-term supplier declarations. So the page on gov.uk is clear about long-term supplier declarations in saying that actually circumstances are not set to change as far as I can see. There's no note that says this changes after 1/1/21. So the status of providing LTSDs remains unchanged. But of course, what may change is the origin of the goods, depending on the deal with the UK gets with the EU, if we get one at all, and whether cumulation of origin applies to the goods that you are supplying under a long-term supplier declaration. So it may be that if we don't have cumulation of EU content into UK goods, that you need to review existing LTSDs and amend appropriately. But that guidance is on gov.uk, and we'll try to ensure that you get that link as part of the presentation, and the links at the end of the presentation that we'll add in for you. Have you got that number yet, Claire?
I do have that number. I'd skipped past it. It is 0300 322 9434, and I'll just repeat that again. So it's 0300 322 9434. And if you actually Google the helpline, HMRC helpline, Customs and International Trade, there is also a web chat available on that page as well as the helpline number. Super.
So owner Iran asks, if a shipment departed from before 11 p.m. 31st of December from Turkey and arrives in the UK after the 1st of January, and I know it's similar to the question we asked before, but it's specifically Turkey, are we able to import the goods with an ATR movement certificate and therefore not pay customs union duty?
Yes, that is right. It doesn't really matter how the goods have been moving, as long as you can show that the goods started moving before transition ends, then we treat them as pre-union goods.
Excellent. That's good. on Intrastat, Paul Mayhew
Oh,
asked a
dear.
very complex question about Intrastat, and which demonstrates, I think, that there is some confusion with regard to Intrastat data that has to be uploaded after the 1st of January. So he says his understanding is that, and I'll take them one at a time, from UK to EU is no longer required. Is that correct?
That's correct. Exports, you don't need to do Intrastat.
Okay.
From GB to EU.
So no, I didn't say GB. I said UK to EU. So, but it's GB to EU. It's not required. If it's Northern Ireland, then it is required.
Yeah, that's right, Liam. So for Northern Ireland to EU movements, Intrastat is still required as it is now.
Okay, and EU to UK, it's required during 2021 until the end of 2021.
Almost.
We haven't set an end. Yeah, I was going to say we haven't set an end date for it, but you do need, if you are currently a registered Intrastat business, or you exceed the Intrastat exemption threshold in the coming year, then you will need to submit Intrastat declarations for the whole of 2021 for goods imported from GB into GB from the European Union.
Right, so that's
And the
EU
same
to
as a
EU.
Yeah, and the same applies, as I said before, in Northern Ireland. Northern Ireland, EU to Northern Ireland will continue to need Intrastat declarations, and that will not be affected by the end point that is put in place for GB.
It might be 2025, depending what happens between now and then. So I think we've answered all of your points here, Paul, on the different movements. So you hopefully have that understanding.
Can I just come in, Liam, because there's actually a really good frequently asked questions about Intrastat on the UK Trade Info site. So that's uktradeinfo, all one word, .com. And there is an Intrastat frequently asked questions page on there, but we'll send the link out as well.
Okay, and I'm going to give you an easy one here. This is a shoe-in for you, Claire. Is there any low-value shipments rule under £135? I think that all...
So there is, yes, there is a sort of a de minimis now, and we can send information about that. And there are different rules around bulking for parcels as well. So if you're a company who sends parcels through a fast parcel operator, then there's information about bulking that's available to reduce the amount of customs declarations you need to make. So we'll get those links out to people.
Fabulous.
The only thing I'm going to add to that is that the low value bulking for parcels that is available in Great Britain is not available in Northern Ireland.
Yes, it's important to understand the distinction between GB and NI and UK in terms of customs for the foreseeable future. I'm going to turn to transit now. Gavin Legg says, if goods are coming in from Northern Ireland, transiting through GB with goods coming in from Northern Ireland, transiting through GB, final destination Sweden. So I think, goods are coming from NI over the GB land bridge, destination Sweden. Does this mean that the Swedish buyer would not pay customs duties, etc., and vice versa from Sweden to NI via GB?
So those goods movements could use the current transit T2 procedure. So they could be placed in transit in Northern Ireland, cross over Great Britain, make their way up to Sweden and have the transit movement released in Sweden. And because of Northern Ireland's ongoing position in the EU single market, there would be no need for import declarations on arrival in Sweden, because the goods would retain their status within the single market because they have been moved in transit. The same process would work in the same way in the opposite direction as well. So yeah, T2 transit movements are continue to be available for movements between Northern Ireland and member states of the EU.
Important to say, of course, that doesn't apply to GB in the same way, but it does give what Brandon Lewis, I think, described yesterday as this new opportunity for Northern Ireland business and the private sector. I guess that's one example, perhaps, where Northern Ireland would have a competitive advantage in the use of transit. And I think we're going to see a lot more use of the Common Transit Convention as we go forward as outside of the single market. I'm going to go, it's 4 minutes to go, so I'm going to go to a sort of final question I'm just going to check if Sharon, no, it wasn't Sharon, was it? No, I don't think, no. So Jackie Plowman asked an interesting question, because we've got supply chains that can be fairly stretched in different commercial relationships that businesses have with their final buyers. Jackie says, I move goods to Northern Ireland via a distributor who is invoiced, but all the goods are delivered direct to the shops. Does each shop need its own EORI number and to be registered with the TSS as the importer?
Thank you. So this will depend upon the commercial terms between yourself, the distributor, and the buyer of the goods. So the Incoterms are usually what determines who has the liability for making declarations. In the Northern Ireland process, we are only looking at an import declaration process. So it is whoever under the commercial terms has that obligation who would need to have the XIORI number and ensure that they have a means of making the declaration as the goods move into Northern Ireland, which obviously the TSS would be an ideal solution to use to do that. But it really does need to start with the Incoterms. And if you go on to the TSS guidance and education portal, they have a lot of really useful materials that help businesses who may not be familiar with Incoterms in understanding what they are and how different types of terms that you might agree between yourself and the others in your supply chain may change who needs to make declarations as the goods move into Northern Ireland. So I would suggest accessing the content on the TSS portal to help understand that in more detail.
For sure. So if the distributor is it may be the distributor that has to be the importer of record, and then onward and move them on to the shops. But if the distributor is purely a logistics company and not prepared to take on that role, then it may well be that each of the shops has to act as the importer of record. Just a quick one from Caroline Clark, who says, is it possible to verify EORI numbers that our customers provide? This is obviously for someone that's receiving them perhaps as a haulier or indeed an importer. And if they're wrong, what will happen? So how do you verify that the EORI number that someone passes to you is being correct, as bona fides?
So there is on gov.uk there is an EORI checker facility on gov.uk for GB EORI numbers. XI EORI numbers, because of the different role of Northern Ireland within the EU, with the EU, they will be available on the existing Europa EU EORI number checker.
Superb. Thank you very much.
The one thing I will just say, Liam, is the XI ones will only be there from the 1st of January.
Of course.
They won't be there now.
You can't check them beforehand, but they will be there later. Yeah. And it's days away.
Days away, but they won't be there. So if you're going to check now, they might not be there now, but they will be there at the 1st of January.
Well, thank you to both Ellie and Claire. We're just going to bring things to a close now with 1 minute to go. I do want to say that I really appreciate all of the questions that you brought forward. I do apologise for the hiccup earlier with the slides, but you will get the slide pack. And if you just bear with us just for a moment, a few hours till we get some of those extra links on to that slide deck before we send it to you. I should also mention, you've heard about the helpline, which is there. You can also, go on and ask questions by email to HMRC. But there is also some forums that have been set up on gov.uk, particularly around customs, where you can pose some of the very complex questions that we've not been able to get to today, because they are quite complex. And frankly, it would be unfair to pose those questions in this forum without, well, frankly, I couldn't answer them myself. I would need to take some time and ask you some questions back in order to respond to those. So we're going to put all those questions, pass them on to our friends at HMRC, and we'll see if we can get some responses back to you in the meantime. But there are lots of ways to interact with HMRC that they've brought forward. So I'd urge you to use those. Time is running out. I understand the frustration, but we are all doing what we can to help businesses as far as we can. Chamber Customs remains on hand if you need declarations made either way. Of course, I need to make a little bit of a plug there. And your chambers are at hand across the country to assist you, to assist their members, and to assist you if you need their help. So thank you very much for your attendance today. We wish you well for the Christmas season. If you get a holiday, brilliant. and hopefully we'll have helped you a little bit today to make sure you can be more successful in the new year. Thank you very much and goodbye.